I'm going to do the rundown on 4 currency pairs here. And everything's against the dollar in this setup. So all these different configurations are doable from a standpoint. I would swing trade this account. I could handle that psychologically. I could place grids in here and walk away next week. And I can already see the trade without having to get out the all the tools. I know that I want to sell above where we're at, and I want to cash out on the pullback. So I know I want to sell here. This has always been a tried and true method, is to sell every 50 pips. So that next week would be, I'd start selling here, here, and then inside those, they're swing orientated. Say you put a master stop up here, and so there's 4K, right? Here you put in a sell limit for, I'd say, a scalp here, because we haven't got into that. See, we've already nicked off that top, and this has already popped the cork on the assault on the dollar, and right near the end of the year, mind you. Complete topping of the stock market the same time this is here. Same thing. Double bottom on wicks. Monster bottom. You can't even see, because I made this so that everything's, you can't, I chopped that off, but it goes a little bit lower even. So the little baby lines are 10 pips, and this is the 100-yard line. This one's going to put sell limits up here. I would sell actually from the 50 and every 50 pips. Now, if you got more money, you sell every 25 pips, but that's your initial starting trade next week. We all know this is going to be ripe for the pickings. Put a 10K on each pair. You're at 40K. 40K. Now, you're going to get filled out all these tickets? Is the market really going to go smashing right through there next week? Maybe. Why not? Look at this. And look at the beautiful double bottom. Does it get any simpler than that? You're getting a climax here without getting into all the toolbox. A child could see, connect the bottoms. Connect these two bottoms. This is the target of the bears. Everybody can see what they're thinking. The people that sold here, and they've got a trend line here. It went beyond their target. In fact, they probably feel bad that they left something on the table. Now, if you do precise lines, but imagine you're going to just do a moving average, but trust your own intuition in drawing the thing. Just be like, yeah, this looks like it. Hey, let's just, analysis done. Next problem. Now, the problem is that waiting for these markets to come into your order bank and play out your scenario, which you figure there's going to be a guaranteed battle zone, guaranteed up and down. You're guaranteed, if you run a 300 pip range strategy, you're going to make money. Buying this new low. How many pips are you up? Are you kidding me? These are the one that when you play pool and the balls break and you see the balls are right near the pockets, typically those are knocked in first. That's a scalp, because you got to clear the table for other strategies, unless you're going to leave it there and it's the other guy's ball and you play some bizarre strategy, right? And in the chess terms, if you use a chess situation and this is a chessboard, well, this thing's castled, right? This engulfing pattern to me is like a castling. Okay, that's done. That story's been complete. Everybody that bought the extreme unfair value and the sellers were supposed to come here, they didn't. They sheared their nuts off. They took it back to the double bottom. They trapped these guys and people took a little scalp off the table. This hasn't castled yet. This has not come up to here. This is the next one to pop. We put sell limits up here. I would start maybe at the 50 here and put sell limits, because it looks like we definitely... everybody's going to get out here. And interestingly, how the market came back to here before it went through the floor. Never seen that pattern before. But how do you trade that pattern? Do you put sell limits here from the wick to the close? Absolutely. Now, the aggressive trade is to start selling not only at this new low, start buying at this new low for that move, is to start buying here to have a buy limit here with a 200 pip stop. Now that's the break-even trade. But you have this all in here. You commingle it all. Every 100 pips, I know it just seems inconceivable that if 2 weeks ago you would have literally just put an order here and with a 100 pip stop, 200 pip stop on each order, and on this one with a 200 pip stop, even though you didn't get stopped out, right? You have to give the market. You can't be cheap. In other words, if you're going to ride the British pound, you've got to dial your size down. You don't try to trade better. You just dial your size down because, I don't know, I mean, it depends how often you're trading. How many orders you got pending out there. But buying this right now, any of these currencies, who's buying this stuff? You'd have to go down to a smaller time frame to find a place to get in. This looks like it could even gap open to the upside. This thing's so pissed off, and this was it's the end of the world for these currencies. I love this end of the world talk. It couldn't be a better place to trade you trade the engulf. You don't get in after the engulf and say, oh, we got a confirmed uptrend. You really think this thing's not going to back up a little bit? You got to be kidding me. So it's going to go 50 pips up maybe on each of these currencies. You're going to sell 50 pips above, plain and simple, on a very small position. And put a 100 pip stop on it, right? Start off with that. And then if you've got money left over, maybe you make 25 pips on that. Well, you just get the fuck out, right? I mean, if you see that you should be buying now, you have to cancel the whole. If you're going to scalp, you've got to cancel the swing idea. You cannot be both people. You have to have a ticket that was designed with a 100 pip stop to make 20 pips. And you have to have a ticket that's designed to risk 100 pips to make 200 pips. So this idea of risk-reward ratios, it's kind of bullshit. Because if you trade more tickets with a tight stop, dollar-wise, you're risking the same thing as risking $10 to make $2. But you're guaranteed to make the $2 nearly. Because you're not going to get stopped out of that trade and pay the commissions and the spread all over again. So that's a big misconception. People have totally distorted the 2% risk of your account. 2% of what? 2% of a mink coat? Do they still make mink coats? So all that stuff, and this stuff should just be child's play to people. I mean, you would think, right? No, absolutely not, because the complexity worship the people that have built systems, that they're selling a system. Literally, they're selling a pretty colored moving average. But I just find it impossible to. It's so distracting. I mean, it's cool. Granted, it looks cool. Like you can watch it on the weekends on a simulator. But when the market's open and it's roaring up 300 pips and you're thinking, God, maybe I should be selling up here. Well, if you plan this out on the weekend, on the weekly chart, you can already see what's going to happen. And obviously the dollar to the, which one's closest to the top of the wick right now? Which one's just beating the shit out of the dollar? It was the Australia and the euro, but the New Zealand backs off because the spread's so big. Look at the spread. This is Oanda. This is Oanda. This trades worldwide, this broker. And look at their spread they're giving you on that. 20 pips on New Zealand. So if you want to make 100 pips, and you're a swing trader, like I said, I'd be getting out of these. I'd be getting out of that right now. I would have got out on Friday. Because anything that happens next week is going to be about selling, for me. Selling into that insane resistance up there and buying on pullbacks. So where would you buy this if you're bullish? In other words, or where would you get out if you just sold this? You're going to look for the last known. When I say last known top or bottom, I literally mean look back and find one more peak or valley on any one of these charts. And they're all going to be at different places, and some are going to be deeper and some are going to be shallower, and you'll be able to see, okay, well, and then you can put on the diagonal lines at the last thing. But you always want to look for the horizontal view of the market. The market profile means you turn the market sideways and you look down you're looking down the profile, right? You can only see, there is no other dimension. There's no time now. There's just pure price, no time. You took time out of the formula. All market profile is that you could raise time from through the 3D view. You flatten the market, and now it's about the frequency. How much time did it spend? I mean, how many times did it trade at that level without regard to time? So where's the density? The volume density in sheer terms of the weight of the market. So if in fair value is the weight, the bulge in market profile is the density areas. That's also what a doji is. So you don't need, if you look at a doji, it opened where it closed, so it means that it finds weight at the center that has a resting, and then when you go and buy on, say, the edge of a envelope, you're getting on the unfair value. Obviously, it's too fast and too. It's not. It's what people call a fake out, or they would call a trap. Now, anybody that's going to go into the, everybody, I'm sure, if you look at whatever they're saying about these currencies 2 weeks ago, 3 weeks ago, they're just like, oh, it's going down. Well, yeah, it is going down. For the reversal trade, in here, you got to count the pips, because you got to figure out how many pips you're going to put your stops in at. If you're going to trade with stops, you don't have to. You just use the account as a stop. Let's say you bought on the 50-yard line here, and you bought on the 100, and you had a 100 pip thing, because you're like, oh, you know what? They're going to shear that off, and inside there probably is some scalps, because this is the weekly. And here you did the same strategy. You bought here, you bought here, you bought here, and this one you bought here, and this one you bought here. Doesn't it seem so simple when you look at it now? So obviously you're going to sell here. You're just going to sell there. And you're going to sell here, and you're going to sell there on the hundreds, right? So if you want to fine tune it, because we all know the 100 and the 50 are very popular prices. And you want to scale 3 tickets in there. And maybe you have 120 pips stop in each one. If you want to make sure you get in all these, you need a stop that's, so you'd have 3 stops here that if you're going to lay in a static grid, those are all connected to those tickets, and then the take profits could be, they don't even have to be that big. But this is the end of the world stop. I don't want to blow up my account stop. And so I know it seems, also seems counterintuitive that a bad ratio makes more money, but it's true. It's true. I'll be doing it next week, so I'll prove to you it works. If you're like, oh yeah, it's going up, and you just say, you know what, put a wide stop and put a early take profit, start getting me out of stuff. Okay, I don't know if you've ever been on a date. I guess the girls do this trick where they have some of their friend call them, that's at least in the movies, and they call and they go, oh really? Well, I got to run. If it's a bad date, that's what you have to have, a really wide stop on that puppy, like this, and you have a take profit of, you're risking 100 to make 50. Worse than break even, or break, because this is a higher probability of making money than even a break-even order. Because if you break-even's too tight and the market comes smashing down in, it's like, goodbye. In other words, some guy asked me a long time ago, Well, what happens when they stop you out? I thought, yeah, I mean, that's the thing. How many orders do you put in there? But this is easy. This next week, I mean, if you look at this view, everything against the dollar, this is the, now you have to swing trade this. This is not high frequency trading, not trading that on the demo. I'm trading the scalpers trade because I really think you can make more money per day. There's more trades per day. We're here, there's only going to be a few fills next week. If you sell on the 50s all the way up, I wouldn't sell at the 100 here again because I think that, sorry, I'll get to the buy part of that. So where are the buyers going to come in? Well, these double bottoms became a top, and then we could expect that we're going to buy here. But we can't just buy here. We have to buy here. We have to buy at the 100. We have to buy here. We have to buy here. So you have this grid here to buy, and this grid here starting here to sell. It's that simple. And you would just, if you don't want to trade with a stop, there's just a couple bucks in the account. That's the trade plan. Here, buy limit here may be too tight. This spread is so terrible that you're almost to that top. This is the last known top. That's what I was going to say. That's the last known top. Too tight. I'd buy here, back where the internal top became a bottom. This is the top inside the bottom. That little zigzag. Just a juicy area. You have to run monster. You have to realize that this thing is so volatile. And it's just a dramatic, like here, sell limits here. Can you picture that? How much money did you make? You're selling new highs. You're selling that trap. You only made like 500 pips on this. Okay, you want to trade this thing, 150 pips stop to make 200 pips. Place 3 tickets in there. Never got stopped out. 3 tickets like this, 150 pips stop to just make 100 pips. Boom, you're out. Trade's over. Yeah, I mean, you just do the math. You literally just do the math. 100 pip stops on everything. Risk $10 per trade. Swing trade it. 200 pip stop. But putting a 200 pip stop on 5 standard lots, yeah, you're going to make $1 million, but what if it does keep tanking? What if this is not the bottom? And of course, what if you didn't get out here and take something off the table? You can imagine, right? And then, so yeah, if you didn't get on that, that was the trap. That was the trap city. And even here, when I started this whole demo, I started off with 8 currencies. And I was like, and then this thing, wow, last week, again. Insane. That is insane. You have to go super wide on that. But it's just, yeah, every 50 pips, that's my recommendation. I'd buy here at the 100, here, all next week, all the way down. Sell, sell, sell. Could it be any easier? Now, you're not going to get filled on everything. I think definitely if you put an order right here for a scalp, you're going to get filled, but you might get blown out. You have to start selling up here to here. Start selling this top. 50-yard line for sure. 150, all the way up. And as they come up, and then they come back, cash out, do it again. It's not going to go in a straight line up there. If you're on the daily, if you saw the daily of this, you would think it was a 5-minute chart. You just, this is so easy to trade the weekly like this. This is how you do trade the weekly, in my opinion. You don't do stuff like, well, let's take a look at the weekly trend. Oh my God, are you serious? Dude, all I see here is missed opportunities. I don't want to hear about it, right? I don't know. I don't want to know the last guy you were with. Don't tell me the story. I just care. All that matters to anybody that is short this thing, are they going to take their stops out? Hell yeah. They're going to take them out. So how do you get in here and buy back their stops and scalp all next week. You scalp all next week on these. They'll be going off like popcorn. I mean, you can imagine what's going to happen when we get to here. It's going to be psycho, right? Guaranteed pullbacks off of that. Guaranteed off of this. Look at this double top. Are you kidding me? Double bottom becomes a top on the weekly. I can't wait to sell here. So I did that trade on the yen. One night the yen was coming up. I knew it was going up. It was right here, and I'm like, you know what? I'm not going to chase the thing. I know where they're taking it to. I'll just place my order at the battleground. Like, I know this is going to come up. Want to fight or have a battle up here? Just lay a trap up there. Now, how do they size those? Now, if they're sized properly with 10, 20, 15, 22 pip stops, you know, just psychotically diverse. It's child's play. It's going to come up, get trapped, and go through the matrix. You know. Here you can make. Look at this rejection of this bottom becoming a top. They're like, see you, bye. Obviously, we're coming up into here for a sell. Now here you're going to have to be careful and put 100s in. You put 50s in here. You have to go with the ATR. This is a monster move. You have to sell every 50 here, but here you can get away with selling every. Let's see now the spread's against you. For God's sakes. It's a 20 pip spread. Your stops, how tight? But Eurodollar's king of tight spread. And it's not a bad volatility right now. But if you couldn't see this coming, talked about this thing 3 months. It's obvious, right? Eurodollar. Look at that in Gulf. Man. 400 pips. Risking how much? You started buying like a rape date about right here. Buy. Committed to buy all the way to here. Committed. Definitely. I mean, look. What? Wow. 150 pip buy zone. Buy. And the one that got in at the bottom. What a killer trade. Buying at the 100 and the 50. So the 50 pip grid. Same stands true up here now. Every 50 pips. That's just a gimme trade. Those are the pool balls that break near the pocket. Guaranteed fill almost. And if it doesn't fill, no risk. Maybe it comes back to here, so you run the buy limits here. But you want to be involved. Let the market come prove you right. You think that that's resistance? Well, it should be. And, you know, it's the same strategy as what's going on here. You're buying this whole area for this ride. You're exiting at that doji. You have to. So the market's moving, and you're responding to the last move that it does. And you can see it happening. I mean, you can see what's going on here. There isn't any mystery to this. Shouldn't be, I guess. It's pretty plain, I suppose. It's a little too plain. I guess we have to dress it up with indicators and stuff to bling it out. It needs some bling. I mean, look at people's cars. I was talking to this guy that designs cars, and he said, you know, that radio is like a computer onto its own inside the car now. And look at all these pivots. Look at all those beautiful pivots. You really get some staggeringly precise pivots out of the Eurodollar. Look at that. It's just like a symphony. Literally, it is just so obvious psychologically what's going on here. And this is for the the view of people that trade without stops. Why would you care about these wicks? If this is your entry and exit window door, this is the monster pivot. I can't, the only other pivot, the closest pivot we're at right now, this precise double bottom here, triple bottom. See the triple bottom trap on that euro? That's all you have to look at. Now you could save this, but what you almost want to do, and I'm going to do it this week, and I'm going to get some high-end card stock, because I need to go out in the coffee shop and torture some people with a quiz. You know, they do that on the street quiz, asking people if they know where the capital of, you know, Benghazi is or something. And so that's, I want to see if that visual trick still works. But the funny thing is that look at this thing. Wow, that Brexit took it on the chin. Look at that puppy. Can you believe that? Now, certainly on the tick chart, you could draw this trend line. If you had a 1 minute chart, that's a view of the 1 minute chart, because you don't know how long it's spent here. Now, if you go to the next time frame, to the daily, you'd have to go to the, look at that. Are you serious? Now, you have to go, it's a 4-hour chart. Tell me about this market again. This is zoomed out as I can get. That is the 4-hour wick. It's 4 hours. So you don't even know how long that took. They could have taken an hour. And you had a chance to get on this wick here. Look at this 100 pip wick on the 4-hour. Now you're going to tell me that buying every 50 pips, having a trade plan every week. Now all you have to do is look at the weekly. It just doesn't take rocket science. It's the 4-hour chart. How hard can trading be? Well, I don't know why you're buying down there. I don't even see a fib extension. Yeah, I know, because why would it matter? Like, if this is 50 pips right here, and you have buy limits here, and you continually keep reloading the gun. Now, granted, the market's coming back to the battle zone again and again, but you have to reload the minefield. After the army walks in and trips all your claymore mines there, and you kill all those people, because that's how you make money, and you kill them. So if you have a bunch of, every 10 pips you're buying here, and then this is your trap, certainly if it ever came back there, you'd have to reload. So here you bought, and then you had to reload again. You sold here, and you had to reload again that strategy at the 100. Because they need that. Somebody is willing to trade at this level, and when you come down here and they're like, oh, okay, well, let's pick up these orders because somebody's willing to pay this price. There's whatever whatever it is. Oh, this looks like the red wagon trade. Here's the wheels. But that's the thing about these markets, is that people cannot believe that the 4-hour chart. Now the 4-hour chart here, I don't know what the actual timestamp is, but this bottom becomes a top at the 100-yard line, and you have a sell limit there. And when the week opened, you're down here, and maybe you bought this new low, which just inconceivable. Inconceivable if you're used to running moving averages and you're looking for engulfing patterns and all that. Inconceivable, because you just can't see that here. I don't see it. I can't even imagine which moving average, and this is the 4-hour chart. Do you even want to waste time on that? Was there any orders below here? Was anybody willing to buy this price for just that moment, for that 2 hours or whatever have you, comes screaming all the way back up to your sell, and this is all happening within 1 week, comes all the way back down to retest like a flunky and beyond, and the 100. So if you're trading the 50 pip grid on the weekly, you should be able to make a living, right? Obviously, selling here and getting out here to make 25 pips with even a break-even order. Here again, selling here with the break-even. Put a couple break-evens in, put a couple good ratios, but you're going to have to just stack that up. You could put some psychotically 20 to make 40, 10 to make 30. If you're going to put a 10 to make 30, you're going to put it around here, because if you ever make it to the 100, the 30 is more probable. It's more probable to get a 30 pip pullback off of a really unfair value. Imagine here, right at the 100-yard line. Now, those things inconceivable also, because it just seems inconceivable the way I've seen people trading. It just, nobody talks about putting in a 30 pip stop here at the 100-yard line and putting in a 200 pip win, right? Because they say, well, why would I place an order like that? That's just so, I'm asking too much of the market. And you could have had a buy on the 100 with a 100 pip stop. Now, if you're buying on the 100 with a 100 pip stop to make 100, the break even's paid out. Now you can't believe you're holding this with the 30 pip original stop to make the 200, but you have to have all those orders in. At the 100-yard line here, you have, I'll risk 100 on one. I got a break even. I've got, I'll buy here, another one with a break even. Now you're risking $20 to make $20. Here I'll put in a scalper. Stop was too tight. It got blown out. Here I put in a 25 to make 25. They could all be break even. You would kill anybody that's trading. There's nothing wrong with break even as long as you're putting in more than one order, because now you are saying, I'm going to buy break evens from here to here that make 100 pips. So you're always in a 100 pip bracket. Yeah, I'm risking a little bit better than lottery tickets, don't you think? Like, if you cannot see this bottom on the 4-hour black line, conflues with this one. It conflues, which is the same of confluence. Hello, 30 pip wick, you cannot handle putting in 3 tickets with 50 pip stops to make 50 pips. You're out of the trade. Okay, now you're going to wish that you held on all the way down here, but maybe you got a trap down here to buy every 50s and they blow you out. But see, they don't blow you out of all of them, because this one at the 50 made 50 before it came down. Stop the stop out. So I'll be running bad ratios next week, trying to, I'll realize I have to keep in mind that when I place a bad ratio trade, it needs to be at a very high probability turnaround. I'll also have the greedy trade in there. So to blend that's all psychological. The scripts that you build, when I was started trading without stops, when I finally put stops into my scripts, which I actually have all the scripts, probably about 2,000 scripts now, and some of them were written, like I'm looking at them now thinking, what were you thinking? And it was literally like stuff like, you press one button and it comes in and buys every 50 pips for like, oh, it's just like this, and the stop is down here. Forget the stop being here, a master stop. I mean, it was psychotic risk. But you know what? I never got stopped out of that. Now, the account didn't always survive, and I ran that on demos and real money. So I've been going a long time on this stuff, going through the possibilities. And of course, some were written on 4-digit brokers, so I couldn't even. One time I loaded the 4-digit broker script into the 5-digit broker script, and let me tell you, it's looking at this 40, and it thinks it says 4 pips now. 40 pips deep is pretty deep, but if you 4 pips deep is a whole difference, and that was interesting. And I still got some of those on the laptop that if you launch them, they're going to... So having more than one computer, that's another thing you're going to need if you're really trading, because you have to have more than one kiosk or more than one... this is presupposing that you like trading. You'd have more than one guitar if you were a guitarist, right? This is the conventional wisdom. So that's the angle I'm coming from, is that, you know, you have to accommodate your normal thing. But, you know, as far as inventory, as far as buying and selling currencies, it should be very simple. It's going to be one of these dumb things like, you mean I just put an order up there? Like, I mean, yeah, you know, in the end, yeah, you know, just figure out how much you can afford per order. Now, you could run a 50 pip stop and everything. That's quite a liberal stop. You could risk 50 to make 25, 50 to make 50, 50 to make 75. And this way, you are accommodating your three psychological problems there. One is, I'm afraid I'm going to miss out on targets, so I'll risk more than I make, which would be your kind of a kind of soft approach. You know, in other words, you realize that, hey, I'm not greedy, and then you have your middle of the road trade, which is break even, which is like, you know, I don't really like people that don't talk about politics. You know, hey, listen, let's just keep this friendly, and I don't want to offend you. It's like, you already did. No, so you know, then there's the, oh well, I'm just I got a pencil behind my ear, and like, I don't, risk ratios really matter, really matter. Because you can see the winning, the guy that had run the robot without a stop, he goes, you know, but it wins more. Well, of course, naturally, because it's not ever going to be susceptible. Of course, this Brexit wick here is a little spooky right now. If you're trading without stops, I just would warn anybody that even with stops, you know, this stuff here is pretty spicy, and you had to know, right? Because you could look back and see. Well, when you're on uncharted water like this, you know, it does matter. Like, if you don't see anything to the left, you got to wonder about these prices. Like, Brexit. Once you went below here, all bets were off, I think. So yeah, if you've been trading the British pound, you know, you got to do it on a blow by blow basis. Huh, hilarious. But people, they love that. Oh, I made so many pips. Yeah, you know what? British pound, when I went through this price here, went through the 2008 low. Hello, bye-bye. Got a little spicy, did it? Yeah. But see, from a realistic standpoint, the range traders made enough money here that even if they got stopped out on this stuff, my God, man, look at that. Look at that thing. Here's the speculation for the angular targets, is this one. From this bottom to this top. That's a nice momentum bounce, kind of. It looks like a likely place for it to land, but it's always going to come down to this horizontal price. So you can speculate this, that it's going to break out, pull back, and maybe it'll meander up to that line. Who cares? Because I figure how it gets there is where you're going to make your money. Are you going to sell here at the 100, play the playbacks? This is a little bit too fantasy land stuff. I mean, sure, you could say, oh, look at this channel, but yeah, what if you buy here and it pulls back to here? And then, oh yeah, well, turned out this was the better channel. Oh, it turns out that it had to come back to this top. It's a higher probability that if you put a buy limit, which too tight here, I'd say we could retest again. Hey, you know what? Maybe it just goes sideways here for a while. Just play the retest game, and all your trades are going to be along here. Who knows? But obviously, the first place I think is going to be to sell here and play the can we go higher game. Trading all the retracements off of that. All the little pullback things, and just putting them way out there at the 100. So you're not filled unless it's really worth it. I mean, look at this. Look at this thing go. And didn't even make it to, like, I'm sure everybody's like, wow. I mean, think about the guy that's long here. He's like, I got to get out here. He's like, I can't take it. And he's so happy he got out there, you know. But he buys back here at the double bottom. But that's quite an obliteration. Here, I think it's obviously a seller's market next week. The dollar's had its punishing run. 10 days of sheer terror, or about a week. And the euro coming into that trap, coming up into the, so that's it. This should be obvious. The 50 pip grid, swing traders, swing trader formula.